Hello everyone and Assalamu alaikum. I hope you are doing well. I welcome you to the orientation video of the UK taxation course. My name is Rana and I'm teaching UK taxation course since last 12 years. And in this video, I would be guiding you about the paper format, syllabus areas, how to prepare, how to learn the basis of taxation, the basic calculation of the taxes, what exactly are the types of taxes, who governs tax in UK. All of these things would be covered in this video. So let's formally start with the discussion of the Finance Act. Students who would be taking a UK taxation course in any of these four exam sessions. For these four exam sessions from June 25, September 25, December 25, and March 26, for these exam sessions, Finance Act 2024 is applicable. Means the tax rates and allowances which are according to the Finance Act 24, they would be relevant for these four exam sessions. So first thing to remember, if you are going to study UK taxes, then if you would be attempting UK taxation paper in any of these four exam session, you must be following study materials on which Finance Act 24 is mentioned. If you are following any study materials on which Finance Act 23 or 22 is mentioned, all those are irrelevant for you, right? On the next slide, let's talk about the paper format. UK taxation paper is divided in three sections. A is for 30 marks, section B is for 30 marks, and section C is for 40 marks. So this is how a 100 marks paper is for you. Section A is consisted of objective test questions, section B objective test questions, and section C CRQs are tested in section C, right? CRQs are constructive response questions. Section A questions can be asked from any area of the syllabus, whereas Section B, there are three scenarios. One scenario from capital gains taxes, one scenario from inheritance taxes, and one scenario for value-added taxes. For each scenario, there are 5 questions, and each question worth is 2. So for 10 marks, there is capital gain taxes. For 10 marks, there is inheritance tax. And for 10 marks, value-added taxes examined. This is how a 30 marks total for available for section B. Whereas if we talk about section C, income taxes question is for 15 marks, companies taxes questions 15 marks, and there is a question on the tax planning for 10 marks, and 40 marks area is tested in section C of the UK taxation paper. Furthermore, here we have a detailed discussion with respect to types of taxes. There are majorly these 5 types of taxes. Along with these 5 types of taxes, national insurance contributions are also paid in the UK. Here, keep remember, we shall be dividing these types of taxes in the capital, revenue, or neither type. Furthermore, we'll be dividing these types of taxes in the direct taxes or the indirect taxes. Let me explain capital tax. Any tax which is due to any non-current asset, that is capital tax. For example, if a taxpayer dispose any non-current asset, capital gain tax is applicable, and at time of death, when the estate assets are transferred to other persons, then again in both of these non-current assets are involved, and whenever there is a tax which is due to non-current assets, that is a capital tax, right? And why these two are the direct taxes? Because over here, when a taxpayer dispose any asset, when an individual person dispose any asset on the gain, this tax is directly applicable on the gains amount, so that's the reason it's a direct tax. Thereafter, if we talk about inheritance tax, then again, when estate is transferred at time of a person's death, when the estate is transferred to other persons, so at that, on the value of the assets, inheritance tax is applicable. So that's the reason it's a direct tax. So why these two taxes are capital taxes? Because non-current assets are involved. And why these two taxes are direct taxes? Because these are directly applicable on the gains or the value of the assets. Over here, if we talk about revenue taxes, any taxes which are applicable because of getting earnings, because of the revenues earned. So these are the revenue taxes, right? I'm skipping value added tax for the time being, and I'm going to discuss about the income taxes and the corporation tax. Both of these are due to the income earned, so that's the reason both of these are revenue taxes. For example, if I talk about myself, if I'm getting earnings, if I'm doing job, if I'm doing any business, so I would be getting receipts, I would be getting revenues. Then revenue tax is applicable. Income tax is a type of a revenue tax, and it's also a direct tax because it's directly applicable on the revenues earned by myself. And if you talk about a company also earns profits. Due to earning profits, it's a revenue tax. Furthermore, it's directly applicable on the amounts on the level of the profits earned, so it's a direct tax. And if we talk about value added tax, that is neither tax. It's not a capital tax, it's not a revenue tax, although it's indirectly applicable on the consumption of goods or services. It's not due to the assets involvement, it's not due to getting any revenues. Value added tax is a kind which is neither type. It's not a capital tax, it's not a revenue tax, it's neither type because it's not applicable due to any assets, it's not applicable due to any revenues earned. Rather, it is applicable on the consumption of goods or services, right? So that's the reason it's a neither kind of tax. Furthermore, it's also indirect tax. Why? Because it's not directly applicable on the taxpayer. It transfers from one person to another, from another to another person, and at the end of the day, end consumer bear this value added tax. So we can say that value added tax is neither kind of tax. It's and also it's an indirect tax because it's levied on the consumption of goods or services. And basically this value added tax is there for you, and therefore you and the end consumer who would be buying, who would be spending money on the consumption of goods or services. And lastly, if we talk about national insurance contributions, apart from the taxes, in the UK there is a concept of NICs, right? So NICs are also based on the revenues earned, plus it is directly based on the revenue, on the level of the revenues earned. So it's a direct tax which is applicable on the revenues earned. So it's a NIC is a revenue tax and it's a direct tax, right? We shall be practicing more and more questions, and the things would be more clarifying when we shall be attempting the questions, right? Don't worry at all. Here we just broke down all of these types of taxes in the capital revenue or neither, plus the direct tax or the indirect tax. If we move forward, and if we talk about a tax governing body, every country has its own tax governing body, and UK tax governing body name is HMRC. It stands for His Majesty Revenue and Customs. Over here, if we talk about a few responsibilities of HMRC, by the way, it's not only the responsibilities of the HMRC, these are the responsibilities of any tax governing body for any country, right? For example, collecting tax, maintaining tax records, providing tax awareness, conducting tax audits, detecting any frauds. All of these are the major responsibilities of any tax governing body in any country. So these same responsibilities are there for the UK tax governing body named as HMRC, His Majesty Revenue and Customs. If we think from the perspective of a taxpayer, would you like to pay more and more taxes, or would you be trying to reduce your tax amounts? Obviously, you will try to reduce your tax amounts. And for such, you have two options. Either you can use legal means for reducing tax liabilities, or either you can use illegal means for reducing your tax liabilities. If you are using legal means for reducing the tax liabilities, so that is termed as tax avoidance, also termed as the tax planning, right? For example, there are 2 to 3 options in the taxation law for any calculation, and if you are opting that option which is in your favor, for example, if there are 3 options for any tax computation and you are allowed to opt any of the method, and if you select that method in which your tax liability is lower as compared to other options, if you have selected that option, so that's a tax avoidance, sometimes also termed as tax planning, right? So that's a legal activity, means you are trying to reduce your tax liabilities within the boundaries of law. So that's not illegal. So that's legal, means you are following the legal means to reduce your tax liabilities. Whereas if you are using illegal means, so that is tax evasion, means evading tax by illegal means, right? So that's an illegal activity due to which penalties could be there, uh, interest could be charged, fines can be applied. All of these are the outcomes when you are involved in any tax evasion. From these two terms, examiner do ask a question in section A as objective test question, that which of the following statements are correct about tax avoidance, or examiner may ask about that which of the following statements are incorrect about tax evasion. So you must read all of these points. I have clarified you. I have guided you. I have given you an idea that what exactly do mean by this tax avoidance and what exactly do mean by this tax evasion, right? There are 3 types of tax rates. For example, over here we shall be concluding in a learning, we shall be concluding about the behavior of tax rates. We have the heading of income level, for example, on the income level tax amount and the learning. There are 3 types of tax rates. Behavior of tax rates are proportional rates, progressive tax rates, and regressive tax rates. Let's learn with the help of these examples. Let's say you are earning £1,000, your income is 1,000, and on which the tax amount is, let's say, £200. Your income has increased by the proportion 2. Now your income has increased by the proportion of 2, and your increased income is 2,000, on which a tax is applicable, and tax amount, for example, is calculated as 400. You can see that income has increased by the proportion of 2, and tax has also increased in the same proportion. So when such kind of tax rates are applicable, wherein the income and tax both are increased in the same proportion, so we can say that behavior of tax rates, that's a proportional tax rates, means tax increased in the same proportion as the income increased. But for example, let's say you are getting 1,000, on which tax amount was 200. Your income has increased by the proportion of 2, and your current income is 2,000, but the tax on this 2,000, the tax is computed as 500. You can see that your tax has increased in a higher proportion as the increase in the income, right? Income has increased with the proportion of 2, but the tax has increased in a higher proportion as compared to your income. So we can say that tax increased in a higher proportion as the increase in income. So when such tax rates are multiplied, we can say that these are the progressive tax rates, because tax has increased in a higher proportion as compared to your income increase, right? Third, for example, your income level was 1,000, on which the tax amount was 200. Your income has now increased by the proportion of 2, but when you calculated tax on this 2,000 income, your tax is calculated as only 300. You can see that your tax has increased in a lower proportion as compared to your income. Your income increased in a proportion of 2, but on this income, the tax increased, but in a lower proportion as compared to your income. So we can say that tax increase in a lower proportion as income increase. So when such tax rates are multiplied, your income, that is regressive tax rates. Regressive tax rates are also termed as inverse of inverse of progressive, right? So another term can be used, inverse of progressive tax rates. So these are the regressive tax rates. So whenever examiner would be asking you that how many behavior of tax rates are there, the answer is three types of tax rates are there: proportional tax rate, progressive tax rates, and the regressive tax rates. And keep this learning in mind. You can answer easily to any question which is asked from the behavior of the tax rates. Now, the important aspect, as I guided you in the index, that we shall be following uh, all of the UK tax syllabus areas in a sequential manner. Firstly, we'll talk about the basic calculation, then the income tax area will start. So basically, the word income tax is for the taxation of individual person. For example, if you want to calculate your tax, if I want to calculate my taxation, so that would be termed as income taxes. So income taxes are the taxation of individual person. As we are following Finance Act 2024, which is applicable from June 25 exam session, for September 25, for December 25, and March 26. If any of the student would be attempting tax paper according to Finance Act 24, which is applicable to these four exam sessions. And when it comes to the income taxes, income tax is based on a fiscal year, and our examinable fiscal year is fiscal year 24-25. By the way, within this Finance Act, for the computational aspect for income taxes, fiscal year word would be used, and in Finance Act 24, fiscal year is 24-25. And for individual person calculation, if you want to calculate individual person tax, fiscal year 24-25 is relevant, which starts on 6 April 24 and it ends on 5th April 25. Again, keep these things in mind whenever you would be calculating income taxes. By the way, remember, income tax question is examined in section C for 15 marks, plus 2 to 3 questions can also be examined in section A of the paper. So overall paper weightage with respect to income taxes is like from 19 to 21 marks. Confirmed marks are 15 in section C. 2 to 3 questions can also be asked in section A of the paper as well. So overall paper weightage is like 20 to 22 marks with respect to income taxes in your tax paper. And all of the calculations will be performed in the income taxes according to this fiscal year 24-25, which starts on 6 April 24 and ends on 5th April 25. By the way, every country has its own tax year dates. For example, I can tell you the Pakistani tax year dates, which starts on 1st July every year and ends on 30th June next year. So UK tax year starts on 6 April and it ends on 5th April. These are the standard dates for the fiscal year in the UK. And fiscal year word is used for individual person taxation. And fiscal year 24-25 would be starting on 6 April 25 and ends on 5th April 25. All of these calculations are relevant. Fiscal year 24-25 is relevant to those who are taking TX UK exam in the period from June 25 to March 26 exam sessions. As we are talking about the income taxes, means this taxation of individual person, let me guide. The question is asked in section C for 15 marks. A constructive response question is there, plus 2 to 3 questions in section A of the paper. And you can say that 4 to 6 marks questions can also be asked in section A of the paper, right? Overall paper weightage, as I have guided you, around 20 mark questions are examined from this area in overall text paper. For example, you want to calculate your tax. You are an individual person. You want to calculate your own tax in the UK. So first thing to know about your sources of income. And for an individual person, there are maximum 6 sources of income, which are property, employment income, trading income, interest income, dividend income, and the pension income. These are the 6 legal sources of income for an individual person. Keep remember, tax is not applicable on each source of income separately. Tax is not applicable on every source of income in isolation. No, it's not like that. For taxation purposes, we shall be adding income from all these six sources. Then we will get the total income. From this total income, HMRC allows you to deduct a tax-free income by the name personal allowance. For example, if you being an individual person, if you have, let's say, you have rented your properties, you have property income, and if you are also having a job, you would be getting employment income. You have only two sources of income, you would be adding these two amounts, will get the total income. From the total income, personal losses can be deducted. Then finally the taxable income is there, and on this taxable income, tax rates and allowances will apply to calculate the income tax liability. And by the way, this 12570 is the amount of the personal allowance which is there in the Finance Act 2024. We can also say that for the fiscal year 24-25, personal allowance amount is standard personal allowance amount is 12570. This amount is also given in the tax return allowances. And if you forget during your exam time, you can open, you can see, you can check from the tax return allowances. 12570 is a standard amount of the personal allowance for the fiscal year 24-25. For example, by the way, it's not like that every person would always be having all these six sources of income. No, let's say in a scenario, if it is given that a person has trading income and also the dividend income, only these two can be there in the sources of income, or any three can be there in the sources of income. It's not like that every person would always be having all these six sources of income. No, any one, any two, any three, or all of these six sources of income can be there, depends upon the scenario. What is the key learning over here for the calculation of income taxes? First of all, we will check about the sources of income. We will get the total income. From the total income, we will deduct the personal allowance as tax-free income on which there is no tax. Let's say you earn 20,000. From 20,000, 12570 is personal allowance on which there is no taxation. And finally, the differential would be the taxable income. On the next slide, I'm going to continue on this taxable income, which is calculated after deducting the personal allowance. On this taxable income, then the tax rates are multiplied, and then finally you will get the ITL, means income tax liability. Keep remember, on the taxable income, income tax rates would be multiplied to get the income tax liability. I repeat for the last time. First of all, do add all of these sources of income to get the total income. From total income, deduct the personal allowance of 12570, and then finally the taxable income, and then this taxable income on which the tax rates are multiplied, and you will get the income tax liability. And there are three types of tax rates: the basic rate, the higher rate, and the additional rate. These tax rates are applicable in the form of bands, in the form of band limits. For example, let's say I can guide you with the help of an example. Let's say you have earned an income of 40,000. Your taxable income is 40,000. From 40,000, you will break it into two amounts. From 40,000, the initial 37,700 would be taxed at 20%, and the differential amount from 40,000, the first 37,700 is taxed at 20%. It's taxed at basic rate. 20% is basic rate, 40% is higher rate, and 45% is an additional rate, right? And the differential would be multiplied with the second band rate, which is the higher rate, which is 40%. So this is how you would be calculating the income tax liability, by adding these two amounts, which are calculated by breaking this total taxable income according to the band limits. For understanding this concept, we have multiple examples to follow, and there are 8 examples just to learn about that how to compute the income tax liability. Let's start with example 1. Total income is given as 30,000 and requirement is to calculate the taxable income. If you remember, from the total income, we deduct the personal allowance and the differential would be the taxable income. Total income is given as 30,000. Personal allowance standard amount is 12570. So the differential is calculated as 17430. That's a taxable income, right? In example 2, total income is 10,000. Requirement again is to calculate the taxable income. from the total income, what we do is that we deduct the personal allowance and the differential would be the taxable income. You can see that total income is less than the available personal allowance, and if we deduct the whole amount of personal allowance, you will get 2570 as negative amount. Keep remember, personal allowance is given to a taxpayer for reducing the taxable income but not creating a taxable income, but not creating a negative figure of the taxable income. If this is the case, so what is the relevant step then? If the total income is less than the standard personal allowance amount, then we shall be reducing the personal allowance, and you will write that we are using restricted personal allowance. So the differential taxable income could be nil and it cannot be a negative figure. Let me write 2 points. Taxable income can be nil. After deducting the personal allowance, taxable income can be nil, but it cannot be a negative figure. But it cannot be a negative figure, right? So keep this thing in mind. Whenever your total income is less than the personal allowance, then you have to restrict your personal allowance, so the taxable income will become nil and it cannot be a negative figure at all. If we move forward on the next slide, total income is given as 35,000 and now the requirement has changed. We are required to calculate the income tax liability. In the previous two example, only the taxable income was the requirement, but in this example, you can see that income tax liability is the requirement. From the total income, the first step, from total income deduct the personal allowance to get the taxable income, and then on this taxable income we will apply the tax rates to get the income tax liability. Total income is 35,000 and if we deduct 12570 personal allowance, taxable income is calculated as 22430. Let me show you the band limits. First band limit is from 1 point to 37,700. You can see that taxable income is falling in this band limit. For example 3, taxable income is falling in this band limit. The first band limit starts from 1 point to 37,700. Total amount of 22430, which is within the first band limit. So on this 22,430, tax rate is applicable to the extent of 20%. 4486 would be your income tax liability. Why this happened? Because taxable income is less than the basic rate band limit of 37,700. So on this amount, a basic tax rate of 20% is applicable. And you can also say that when only 20% is applicable in this situation, then you can set the status of the person. You can say that only the 20% tax rate is applicable, so the person status is basic rate taxpayer. I repeat, when the person would be paying taxes at 20%, then the person status would be basic rate taxpayer. In the next example, total income is given as 57,850 and requirement is to calculate the income tax liability. Steps are same. From the total income 57850, if you deduct the personal allowance is 12570, then the differential would be the taxable income and taxable income is 45280. Now you can see that this is more than the basic rate band of 37,700. Basic rate band is 37,700 and the taxable income is less than the second band limit of 125,140. Let me also write this taxable income of 45,280 is more than the basic rate band limit of 37,700, but it is less than second band limit of 125,140. So what will happen in this scenario? You will say that from first to 37,700, to this extent, from this total taxable income, first 37,700 is gonna tax at basic rate and 7540 is calculated. Thereafter, from 37,701, any income to the extent of 125,140. But in this situation, our total taxable income is 45280. The differential is 7580, on which tax rate of 40% will be multiplied and 3032 is calculated as tax liability. The total income tax liability would be 10,572 and a recheck point as you have broken down the total taxable income according to the band limits. So the sum of these two would be equal to your total taxable income. If you add 37700 and 7580, the total taxable income, it would be equal to your total taxable income of 45,280. So this is how we apply the tax rates according to the band limits. Don't worry, we have further 4 examples to understand the same concept. But before moving on, in this situation, the maximum tax rate is applicable, which is 40%. So we can set the status of the person. We can say that person is a higher rate taxpayer. When the person would be paying taxes at basic rate, that person's status will be basic rate taxpayer. But when the person would be paying taxes at higher rate taxpayer, then we will say that person's status is a higher rate taxpayer, because the maximum tax rate is 40% in this situation. Let's talk about example 5. Directly, the taxable income is given in this situation as 112,000. This taxable income is after deducting the personal loss from your total income. So please do not spend your time by deducting the personal loss again, because directly the taxable income is given in this situation. So let's check. This taxable income is more than the basic rate band of 37,700, but it is less than the second band limit of 125,140. Then again, two tax rates will be multiplied and the maximum tax rate would be 40% and the person status will be higher rate taxpayer. How we can apply? Taxable income in this situation, let me write taxable income is directly given as 112,000. This taxable income, initial 37,700, from this total amount to this extent, basic rate is applicable 7540. From 37701, any income to the extent of 125,140 to the extent of the second band limit, but our total taxable income is less than this, so we have to stop at 112,000. That take the difference of these two amounts, and the difference of these two amounts will be 74,300. On this 74,300, tax rate of 40% will be multiplied 29,720, and if you add both these amounts, you will get the total tax liability of 37,260. A recheck point: as you have broken down the total taxable income according to the band limits, the sum of these two amounts, 37,700 and 74,300, would be equal to your taxable income, right? Then again, a taxable income is directly given in this situation as 150,000, but keep remember, this 150,000 taxable income is more than the basic rate band limit of 37,700, and it is also more than the second band limit of 125,140. It means in this example, 3 tax rates will be multiplied, and how to perform calculations, be with me and try to understand this thing. Taxable income is directly given in the question as 150,000. From this 150,000 initial to the extent of the basic rate band limit, from this total taxable income, 37,700 is taxed at basic rate. Difference is on this amount, a 7540 is calculated. Now, from 37701, now you can stop at 125,140, because your total taxable income is now more than this band limit. So your stop point will be this amount of 125,140. The difference would be 87,440. On this amount, 40% is applicable, 34,976 is calculated. In the next step, from 125,141 to the extent of the total taxable income, which is 150,000, take the difference of these two amounts. The difference is 24,860. On this amount, 45% tax is applicable and 11,187 is calculated. The total income tax liability is 53,703, and a recheck point is the sum of these three amounts must be equal to your total taxable income. If the sum of these three amounts is equal to 150,000, that means you have performed correctly. In example 5, the maximum tax rate was 40%. So we can set the status of the person. The person would be higher rate taxpayer. But in example 6, the maximum tax rate is applicable to the extent of 45%. So we can say that person's status is additional rate taxpayer. Only 2 examples are left. I would appreciate if you please pause the recording, pause the video over here, and try to attempt these 2 examples at your own first, and then compare your answer with the answer available in the video. Please pause and try these two examples at your own first. In example 7, taxable income of 132,000, which is more than the basic rate band and also more than the second band limit of 125,140. Requirement is to calculate the income tax liability for the first 37,700. To this extent, tax rate of 20% is applicable. 7540 is computed. From 37,701 to 125,140, the difference will be 87,440, and 40% is multiplied 34976, and from 125,141 to your total taxable income of 132,000. The difference of these two amounts, of if we deduct from 132,000, if we deduct 125,140, the difference would be 6860, on which 45% is multiplied 3087, and the sum of all these will be your total income tax liability, that is 45,603. Recheck point: if you add all these three amounts, the sum must be equal to your total taxable income, and maximum tax rate in this example is 45%. So we can set the status of the person would be an additional rate taxpayer, because any person who would be paying taxes at 20% person status will be basic rate taxpayer. If a person is paying taxes at 40%, the person status will be higher rate taxpayer. And any person who is paying maximum tax at a rate of 45%, person status will be additional rate taxpayer. So on these basis, we are also identifying the person's status. Last example for the same thing, taxable income is 141250. Requirement is to calculate the income tax liability. This total taxable income is more than the basic rate band limit of 37,700 and also more than the second band limit of 125,140. How to perform calculations? I am very much hopeful that you have attempted and your answer will be correct. Be with me and check yourself. To this extent, 20% tax is applicable, 7540. For the second band limit from 37,701 to 125,140, the difference is 87,440, on which 40% tax rate and tax liability is 34976, and on the excess amount from 125,141 to the total taxable income of 141,250, the difference is 16,110, on which tax rate of 45% is multiplied and 7249 is a tax liability. The total income tax liability for this example is 49,765, and the sum of these three amounts, which we have broken down according to the band limits, the sum of these three must be equal to your total taxable income of 141,250. Then again, you have to keep in mind why we are directly multiplying the tax rates with this income or with this income, because these amounts are directly given as a taxable income, means already the person house have been deducted from the total income. So these are the taxable income on which directly the tax rates are multiplied to get the income tax liabilities. Again, in this last example, 45% is multiplied, so person status would be additional rate taxpayer. So this is how you have to compute the tax liabilities according to the taxable income and according to the band limits. By the way, these band limits are also given in the tax rates and allowances. If you forget these, don't worry, you can open up during your exam time from the tax rates and allowances. You can check these band limits which are given during your exam time. So we are done with the orientation video of the UK taxation paper, and I'm hoping that everything till now is crystal clear, and we have formally started the basic areas from the income taxes, and income taxes are further continued from chapter 2 to chapter 12, from the employment income to chapter 12, which is administration of taxes. All these chapters pertains to income taxes, and inshallah, see you in the next chapter. Take care and bye.